So I thought today would this day, the 5th of May 2022, would be a prime day to go over. So I guess as soon as it's relatively early in the month, you can look at the monthly recent bar close and how it closed the way it did. Also, I'm doing this to kind of get the day going a little bit and kind of get a bit into sync straight off the bat. Basically, I have been up early, but I've kind of just been writing and also, taking care of shit. Some like, just like, self care stuff, blah 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 blah. It does take a while. I don't do it often, but anyway, so I'm gonna try and make this quick before the next advert comes for this song. But anyway, you see the most recent monthly bar closed at the very overextended region to the downside with a slight rejection at the very low region, which is also a low overextended region of um, I mean, yeah, it's just very overextended. It also closed with a heavy range expansion to the downside, leading like into overextended territory. Then you've got the weekly recent bar close, which would be almost kind of near and being done, to be honest. Well, no, not really. Actually, it's kind of the middle of the week, so you would not really want to opt to look at the in play. But hang on, so is it May 2022? Ah, okay, May 2022. So yeah, so you'd be looking at this. So you just basically see the monthly structure a little bit better. So basically, you can see that the most recent monthly bar closed right at the very low overextended region of a healthy candle quantity push to the downside right beneath previous atom push range low, which also then started to wick reject at the very low region of, signaling that a reversal is likely to possibly near closer. So it's wick rejecting at the very low overextended region of a push to the downside. If you then go to the daily, remember, like what I do is I analyze how the most recent bar close, like the most recent bar close is the most recent bar close prior to the like session that I'm looking to trade. So like if you notice, like the most recent bar close that I look at, or the chart perspective that I look at, is the chart on the 1 hour, for example, which is the most recent bar close prior to 7, which is the 6 a.m. for for UK time period close. Now, anyway, with this most recent daily close, you can see um, that right. This is where you have to kind of be. This is where like you can kind of trip yourself up because you really want to keep things simple. You really do. Like what I've learned is you really, really, really want to keep things simple. So if you see here, you've got short-term pushes in play that started to emerge from this like very healthy candle quantity, heavily sufficient candle quantity, all with sufficient range expansion to the downside. But ultimately, where did the most recent bar close? Like here, if this is your most recent bar close, and then you're looking at the chart from this bar, where did it close? It closed right at the very low overextended region of a push to the downside, with a wick rejection right at the very lows of, suggesting that further signs are likely to show that suggest that a reversal is likely to come. Um, but then anyway, from this point, you went higher, you wick rejected. You would want to check. This could be a start of short-term pushes in play, and it wick rejected at the highs, short of the short-term kind of push the upside. But you are kind of just also at the low, like overextended, like bottom out region of bottoming out region of a push to the downside that's already begun to wick reject. So you would want to check lower time frames here for possible shorts, but like you're still at the very low overextended region. But anyway, yeah. So you come to the upside, wick reject, you come lower, wick reject, come lower, wick reject at the very low, which is an overextended low region because this is definitely confirmed short-term pushes in play. What do you know? You react, wick rejection right at the highs, you possibly could come lower a bit. You did come lower, and then you had a wick rejection, and then you closed relatively near the highs, but with a slight wick rejection at the very overextended region of a push to the upside. But you are also like you can also kind of see this overall, and this is why you can kind of get tripped up. So right here, someone could be looking at like, yeah, you're at the low overextended region still, and you close as a decent range expansion bar with a slight wick rejection to the upside. So you're still, regardless, you'd be looking at how lower time frame recent bar closes closed the way they did amongst their pushes, because I guarantee you, even if you are operating out this perspective that you're still at the low over extended region on the daily, in the context of the daily, you'd probably still end up being led to shorts here. Maybe if the contingent upon lower time frames, because like uh, from the open it could have just dropped off, and then you could wick reject at the lows, and then it would make sense. But anyway, you focus on where the most recent bar closed the way it did. Like, did it have any wick rejections? Did it close near its highs? Did it have a heavy range expansion into overextended territory, for example? And then, like, how did it start to wick reject? Amongst the in play, and the in play is a short term, very short term pushes in play to the upside. That it closed with a slight wick rejection at the very high region, over extended region, I should say, or mention of, which you would definitely want to be aware of how lower time frames closed the way that they did. So anyway, um, I'm gonna definitely try to keep this close. Yeah, so we missed the doing it before the outlook. But honestly, it's really not hard. This literally all you're doing is looking at what way the most recent bar closed, in whichever fashion slash way, or the way the most recent bar closed like at what region of the push that's in place. So anyway, here you see a wick rejection, you come lower. You do come lower a bit, but then you form like a doji kind of bar close, just sat at the low, bottom out region, or bottom of a push to the downside that does have a wick rejection at the lows of, and you close as a slight doji at that very low region of, and it's just likely to, I mean, to be honest, you could kind of get an insight off lower time frames of what was likely to go on from the next bar, but like, yeah, ultimately relative to just looking at the 12-hour, you would you would probably expect further wick rejections and further signs at this bottoming out region, or just the reversal take hold like what we see happen. But anyway, this most recent bar close is what matters, obviously, and it closed with a heavy range expansion bar up to the upside, so heavy price coverage. Um, Closing with a slight wick rejection at the very high region of. So this push and play to the upside is comprised of heavy price coverage to the upside, like heavy range expansion, singular bar two, with a wick rejection right at the very high region of, which you would definitely want to investigate. And it overall is just sat at the overextended high region, basically, of the short term push to the upside, like I said, with a wick rejection right at the very highs of. Anyway, dropping down to the 9 hour, you see that this is definitely looking prime for shorts, and it would be very interesting to see what originally I had marked up on this day. Um, because obviously we're operating out of the new, well, not new, it's actually old, but re-clicked in, re-locked in, clicked perspective, basically. But the one thing that's kind of tripping us up a bit is like when you've got a heavy range. I mean, here it's just like, you've got a heavy range expansion bar at the downside of an overextend. Yes, so if it's short term pushes in play, like this is a prime example actually. So if short term pushes in play and you got a singular bar, like that's the push, like, and the most recent bar close. So it's like you would just label it as like you've got a heavy, like a heavy range expansion bar closing right at its lows at the very low overextended region of a push to the downside, signaling that it's likely to further extend lower, which it didn't automatically, but obviously then you would track the next bar, how it closed with a slight wick rejection at the very high region of. So this is your most relevant information now. That's what matters. And anyway, you would then check lower time frames, and basically, because short term pushes are on play here, and anyway, yeah, it then goes, you then does react from this region and reverses. But, and this is also the 9 hour too, so that's cool. It doesn't matter, like, if you've got candlesticks you can analyze a chart, but obviously you need all time frames, and time frames from top down to properly do and conduct a, rather I should say conduct, to properly conduct a top down market cycle phase analysis, which you're just determining what market cycle phases are likely to occur out of continuation of further range expansion to the upper downside, or reacting from a certain region, for example, like um, rev- reversing from the higher low region, which, yeah, or further, for example, consolidating at the higher low region, or wherever the market is sat at. Because sometimes, well, yeah, the market's always sat at a high low region. Like, it's always at the high or low region of a push to the upside. But that's overextended, that's contingent upon whether you've got the same or more amount of candles in a push, or the same or more amount of price coverage, meaning like range expansion. That's probably a better term to refer to it as, price range expansion, than the previous atom push. Or um, I'm pretty sure that's it. So yeah, the candle quantity and the price coverage, which is just another term for range expansion, isn't it? So anyway, you've got the most recent bar closed at the very overextended high region of a push to the upside that already began to kind of show wick rejections at the very high region of, which we also have to acknowledge and consider the context from higher time frames, how how their most recent bar closes closed the way that they did, in whichever fashion that is, at their regions of whatever pushes on play. And anyway, you got this most recent bar close with a nice prominent wick rejection to the upside, then closing decently bearish but with a slight wick rejection to the downside. So you would definitely want to look at how lower time frames are set up. But ultimately, you are likely to reverse and react from this region based on this nice bearish wick reject bar close at the very overextended high region of push, which has already begun to show wick rejections at the very high region of. Anyway, same thing here. But I could guarantee that we're probably going to need to look for the 1 hour to set up appropriately. See a first initial intent exhibit of the day bar close. Potentially. It depends though. Like, I mean, the also what I'm also going to start to do is mark out the week. I know I'm completely digressing here from what I was just referring to about how we might need to see a 1 hour nice bar close at the OTR region, but that's contingent upon how the 4 and 3 and 2 are set up and where the signs with regard to how those time frame most recent bars closed the way that they did at whatever region of that pushes in play relative to, in this case, the 4, the 3, the 2, and ultimately the dictatorial 1 hour. Um, had signs with the way that the most recent bars closed however way they did amongst their pushes, what suggested, for example, the market could react and flip higher. But ultimately, yeah, wick rejection at the highs, like the most recent bar closes, wick rejecting at the highs of the daily, short term push to the upside, which is overextended, same with the 12, wick rejecting to the upside, bit more prominently displayed than the 9 hour, also the same thing, kind of. But like you just bearish wick reject bar close right at the overextended high region of a push. That's basically you basically would be expecting further wick rejections to occur, and it basically would make sense to look for sales basically. But from this point, I have to have a look at the 9 and 8. But anyway, the 4 hour, you can see that very short term pushes are in play, and this 4 hour bar close with a nice wick rejection basically at the low range of its short term push to the downside, which under the circumstances of the 9 and the 8 and the 12 and the daily, recent bar closes and closing the way that they did amongst the region of their pushes what are in play, that context extrapolated from their time frames would suggest that this is likely to there is possibly steam left with this 3 hour. So and remember, you are just considering the where the most recent bar closed however way it did amongst the in play, not not like overall pushes or something. So what I mean by overall push is like so yeah, so this would be a prime example. So this would be the overall. Yeah, this is actually a really good example too. So this is the overall push, right? And you just kind of sat at the very high region of it. It's just wick rejecting the very highs. But like if you look, you've got short term pushes in play. Yeah, it's not just one rally and then you got like wick rejects and then bar close and it's just likely to go lower. You got wick reject, you come lower, you somehow have a wick rejection at this high, and then that does result in a reversal lower, and then you got a wick reject again, and then you got this wick reject, and then you kind of wick reject at the very lows of a short term push to the downside. Yeah, so that's it. So so the most recent 3 hour bar close is closed with a wick rejection right at the low over extended region of a short term push to the downside. Some people think I'm crackers with this, saying that when the overall state is the way it is, but this is just the way that I do it. The 2 hour looks pretty good, to be honest. Honestly, this is definitely going to be dictated by the 1 hour and how it's set up, because if this is the, yeah, so you can see that what I was just referring to with the 3 hour, you've got them short term pushes a bit more defined, and you got a 3 hour, you got a 2 hour recent bar close with decent range expansion, closing relatively near its lows, at somewhat the high region which of a push that's already begun wick reject, and that was followed by a decent wick reject, decent range expansion bar close, closing relatively near its lows, also under the context of all of the time frames and basically the contextual universal position the market sat at relative to all time frames comprehensively. Um, so yeah, this does look good to go lower, to be honest, but like this weight rejection's a bit sus. I must say, I have a feeling this is probably going to run without way actually. Yeah. Oh well. I've definitely seen situations like this before. But I mean, look at this. So obviously, like I was just saying at the start of this video, you look at how the market, in the case of the 1 hour, what I'm like, no, in the case of my approach, what I'm doing is I'm looking at how the most recent bar closed relative to like an array of time frames closed the way it did prior to the bar that encapsulates this session that I'm looking at. So obviously the recent 1 hour bar close prior to 7 doesn't encapsulate 7 till 10, but it's the most recent bar close prior to 7, which is what I'll look at. So I'll look at all the most recent bar closes prior to 7 and basically see how they closed, however they did, and whatever formation they did at whatever region of the push what's in play relative to those that time frame being looked at, written bar closed, closed state, or closed way at the region of whatever push is in play. And anyway, you can see that short term 1 hour pushes in play, so wick rejection slightly follow with a reversal because you still kind of sat the overextended high region to some degree, and it's just likely to follow with a reversal. It did, but short term pushes are in play 100%. And then you got a wick rejection at the lows of this push to the downside. Doji close to at the low region of a push to the downside. So ultimately, what you would want to see, in my opinion, or my case, would be um, you'd basically just want to see let's have a look at the 12 real quick. Because like I think the market setup kind of, I mean the thing is as well though, like yeah, you do have kind of decent look at how full this body is, and you also did close relatively near the highs, right? So it's like, but it is also like at the overextended region wick rejecting, sorry. um and then you've also then got the 9 hour, but like look at the 9 hour did also have like a slight wick reject to the downside too. um like yeah. um But overall, it is just that the like overall the 9 hour recent bar close is closed did at the region of the overextended push to the upside, which has already begun with rejecting at the very highs of. Then the most recent bar close itself closed with a wick rejection to the upside, closing bearish, um, signaling that basically the reversal is likely to take hold. But to be honest, now that I'm looking at this even more, if you then just go the 3 hour. See how the 3 hour recent bar closed the way it did. Yeah, man. You just ultimately you would just like yeah, you don't want to trick yourself because real time it'll trip you up. That's for sure. Um. So yeah, 100 million%. You would want to see just a nice 1 hour bar close. I was tempted to say before looking at the 12, re-looking at the 12 again. You would just want to see a 15 nice close, which you didn't even get. But like obviously you'd also want it at the OT appropriate fib pole region 2, which would be what it was initially. And anyway, you don't get it. So yeah, but this is a prime day, and this is also making sense too because I remember you didn't get that much. You did get enough setups. You got about 4 or 5 definitely within a month. But like so it's perfect to be honest, but you didn't get that many where it's like one every day. And I remember some situations like this where like it definitely makes sense to look for sales, but ultimately you would want to see the market set up a bit more appropriately based on, like, for example, the way the recent balls closed the way they did amongst whatever regions of the push that's in play. That's the most recent balls closed in whichever fashion they did. But anyway, this is the I don't even know what you could call this. Or this is how, because I mean it is real. You can see how it's real time emulation. I mean you're literally looking at how you would look at the chart real time. So I guess I could call this video uh real time emulating real time emulating 5th of May 2022 top down market cycle phase analysis, Euro USD or something. But yeah, this is a decent video.